James Blackwell's JB Commercial Finance here. A very brief video about the benefits or not of fixed rate loans. So generally when someone like myself is talking to a client, we have the deal agreed, they've got our amount of lending in place. This is traditionally property finance. Smaller unsecured loans are done on a variable rate basis, so the amount can fluctuate if interest rates set by the Bank of England do go up or down. But once you've done a commercial mortgage, so it's a period of time you've got an agreement for 5, 10, 15, 20, 25 years, the client then has the options whether to fix their interest rate at a set percentage or effectively go with the potential turbulence of the marketplace. Now, you can fix for a period of time. Sometimes it's 2 years, 3, 5, sometimes even up to 10 years. Generally not beyond that. And to be perfectly honest, as a broker, I wouldn't advise anybody to go anywhere near a fixed rate longer than that. But there are benefits to fixing and there's benefits to having a variable rate. And a lot of it comes down to your confidence in the marketplace. A lot of it comes down to your confidence in the business. And a lot of it comes down to your ability to plan. But the most important thing really is the mindset. So if you are a bit of a risk taker by nature, then you're probably going to want to have a variable rate loan. Base rate is currently very, very low. It's obviously been a historic low of 0.25% in very, very recent memory, and that has led to some very cheap borrowing. If you were borrowing at, say, 5% over base rate with a business loan, then you're paying 5.5%. Fantastic. If base rate then goes up to 4%, which is kind of a historic, pretty steady figure, then all of a sudden you're paying 9% on your money. And the important thing to remember is that every 1% increase on a £100,000 loan is an extra £1,000 worth of interest in a year. So to be very sort of crude about it, if base rate goes up by 3% and you've got a mortgage of £100,000, then you're going to be paying an extra £3,000 of interest per year for your mortgage repayments. Now £3,000 a year is a not insignificant amount of money. What's that, £250, £260 a month, whatever the hell it is. So it's a lot of money to find if you're not prepared. On the other hand, if you fix at an interest rate, let's just say you fixed that 8% in 2008, which again was done through the bank, as base rate was then currently 4.5%, 5%. Then you probably felt a bit shortchanged over the last few years, especially if you did fix for a sort of a 7-10 year period. Because with base going down to 0.5%, then 0.25%, now back up to 0.5%, and if you were paying 2 over base, you'd have been saving from 4-5% of interest on your loan. If you had a loan of £200,000-400,000, you're talking very, very significant amounts of money. So it comes down to your mindset. Someone like me presents the options to you, as any mortgage advisor will do, present you the options, but the client makes a decision. And that's very, very important. And it has to come down to your mindset. What's the most important thing for you? Is it the stability of knowing you are going to pay this amount of money per month for this period of time, no matter what happens in the external market, which you can't do anything about, or you want to pay a little bit less now with the potential that in 1, 2, 3 years time, depending on the period you fix, that interest rates will go up and you'll be paying more than the guy in the pub next to you sitting there having a pint, supping away. Entirely up to you. It's just very interesting to think about these things. The other thing to remember though is if you have a fixed rate loan, sometimes you do not have the ability to make any lump sum repayments or settle early without penalty. Most fixed rate loans these days do give you the ability to pay up to a certain percentage every year, 10% say, without any penalty involved. But if you came into some money for whatever reason, or you had to sell your house or property, or you wanted to remortgage away, you may not be able to do that without quite significant penalty. So well worth bearing that in mind when looking to take out a residential mortgage, or in my case, normally a commercial mortgage. A good broker like myself will always go through those kind of things with you. We'll go through the small print and say, look, you need to be confident you're going to hold this period and this loan for this period of time. Otherwise, it can become uncommercial if you have to pay it off early. For more information on variable rate v fixed rate, to talk a little bit more about business loans or any similar matters, please give me a shout. I'm James Blackwell. Thank you very much.